So now we're going to start digging into individual candlesticks. And in this video, we'll talk about indecision candles. So the two main indecision candles, the two that I use and the two that we're going to talk about, are dojis and spinning tops. So dojis and spinning tops are basically the same thing. They look very similar and they mean the same thing as well. So I'm going to show you a couple of examples. We do actually have, sitting side by side here, a few dojis and spinning tops. So these three candles here are dojis and spinning tops. Okay. We have spinning top, doji. So what do they show? They show indecision in the market. Now we spoke about momentum, and this kind of comes back to that momentum that we spoke about, where we have a strong-bodied candle with little or no wicks, and that, of course, indicates strong momentum. Now these dojis and spinning tops are quite the opposite. Big wicks with little to no candle body. Okay, so when we see these large wicks, that shows rejected prices this way, and a little failure to actually get anywhere within that time period. So we're looking at the 4-hour chart, and this basically shows that within this 4-hour time period, the market opened here. It attempted to go all the way up there, but failed. It attempted to go all the way down there and failed. And in the end, closed pretty much at the entry point that it opened at. So little to no movement was actually made within this 4-hour time period. The same thing happens again, and that's the next spinning top. The market opens here. It tried to go all the way up to there. It tried to go all the way down to there. All of that failed, and it closed here, pretty much around where it opened. So those two candles are spinning tops, and the next candle is a doji, but as you can see, it essentially shows the same thing. Dojis are just even more indecisive because we opened and closed basically right on the same level. Okay, we attempted all of this price, we attempted all of that price, but in the end, we just closed exactly where we opened. So whereas we have these strong-bodied candles that show momentum, and they basically show strength of buyers or strength of sellers, these candles, spinning tops and dojis, show us that the market is stuck in a state of indecision, and we don't really know where it's going to go. So you might think, right, if it's going to show indecision, how can it even be useful? Okay, if it's not going to tell us to buy or sell, how can it be useful? Well, the reason that we can actually use these is, first of all, to identify reversal areas, and second of all, to identify areas where we potentially should look to take some profits or, get out of a trade. So they're more so going to be filters rather than a nice tradable opportunity. Now, we will never actually enter a trade based off of a doji or a spinning top candle. We will enter trades using them, but only in conjunction with other patterns. So the dojis and spinning tops are essentially used as guidance for where the market may reverse. So let's have a look at some examples then. First of all, areas where we might be identifying a market reversal by using these dojis and spinning tops. So if we look at this big bullish movement, we can see we've got strong momentum, and then we actually get a formation of a doji, which is this candle right here in the middle. Now this doji shows us that this bullish momentum is completely dead. Okay, it's been going up, and then when we hit this point, it doesn't go anywhere. It just stays completely still with wick rejections both sides. So that alone is no indication to buy or sell, because it's basically the market having a breather, and we could very well continue in this direction if we see a closure above. Right. However, we could also very well see a continuation to the downside if we see the market now roll over and close beneath. So while we won't use them as actual trade opportunities, we can use them as essentially a scaled in state of consolidation to see, right, is the market now ready to go up, or is the market going to go down? So if we allow the next couple of candles to form, you're going to see that the indecision here actually turned the market into a phase of downside. So we saw closure beneath the zone, and then the market actually takes quite a tumble to the downside. Okay. Now that shows us then that the buying momentum completely died with this doji. And seeing the closures then push beneath is what we need to see to actually confirm a market change in direction. So what can this be used for then? Well, let's say we had a buy trade and we were long in this position and we were pushing it all the way up, steady movements, upside, 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 upside. And then we see this, we hit this phase. First off a big wick and then a doji. Now, the formation of that doji candle could tell us, okay, the indecision has now entered the market. Now, if we look at the other structure, we are trading essentially in a resistance slash supply zone up here. And we can see that the bullish pressure that we're actually buying into has completely gone. So what could we do? We could close our position, or we could close part of our position, so that regardless of what happens, we have some profit secured. Now, let's say we close half of our position and then the market completely collapsed. We still would have locked in some profit before our trade was then taken out at break even. So that's how we can actually use these dojis and use this indecision to make sure we don't get burned when the market does form a reversal. We can use them as filter points. Okay, we can see the market has lost its strength, so let's lock something in. Let's not let this all run away from us. Let's lock something in. And then, yeah, if it closes above and continues, cool, we still have half a position running. If it doesn't and it rolls over, at least we lock something in before it collapsed. The market gave us warning. We'd be stupid not to take it. So that's the great way to use dojis. Let's say you're in the market already, trading in line with the market, and then you see one. You can think, right, this could potentially be a time to get out, or a time to at least take some partials off the table. And on the flip side then, if you were looking at this market from a selling perspective, and you were thinking, right, I can see here a supply zone up in these highs. I'm quite interested in selling this market if we can get some form of confirmation. But obviously right now, if we just skip it back, right now, we do have strong bullish pressure, okay, big green candles, no indication that we could roll over. The doji could then be nice indication, right, we are potentially now looking at a lack of momentum and the market could now be ready to roll over. So if we actually had to go at then, scaling down, you could view the doji for what it is. Now we have another doji here on the low time frame. Looking at this consolidation area, you could then think, right, if we can see a push beneath, so like this push beneath that we got, that's going to show us the weakness. And then we could look to sell the market in line with that. So you can actually scale into a doji and view it scaled in to see, what is it providing? What opportunities is it providing? Now, I mean, if we look at it on the 10-minute time frame, that push through was then met with a retracement and tap in and a push down. So this is where the lower time frames and scaling in can be used to your advantage, which we'll of course talk about more so in the processes section. But that's basically an example where the doji forming on the 4-hour chart provided us with the opportunity to consider selling and then actually scale in and find a good selling opportunity to then bring the market down from there. So it really does show, as I've said so many times before, indecision in the market, be it buying and getting out or seeing that and then preparing to get in. It's going to provide you with basically a safety point, a checkpoint to actually consider your trades, right? Do I need to be in this anymore? Have we exhausted the movement? Should I get out? Or can I actually, lock in partials? Or if I'm not in yet, is this potentially a good reversal point to begin identifying a trade from? And that is really how we're going to use dojis and spinning tops and indecision in the market. So there we go. Do a bit of homework. Go and identify dojis. You're going to see them so much. They happen everywhere. And as mentioned, you never want to trade a doji alone. However, if you get a doji that momentum then shifts out of, or you get a doji that you can then scale into and identify a breakout of, they're going to be very useful. Okay, you can either use them as checkpoints for your trades. Example here, great buying opportunity until we see big wick and then a spinning top and a doji, those two candles there. When we see that, we might think, right, this market could be losing its strength now, so let's take some profits off the table. Having done so, the market collapsed. We would have actually locked in some money and saved ourselves from getting burned, from missing out on this entire movement that we just got. On the flip side, then, of course, you could be looking at that as a selling opportunity. Right, we have up here a supply zone. We've traded into it. We traded above. Now we're seeing spinning tops and dojis. Can we scale in and try and find a sellable opportunity in line with the overall market indecision that we're seeing there? And had you done so, you could have caught a brilliant short all the way down. So I want you to go and identify dojis and spinning tops in the market and see how they all react to one another. You're going to see so many of these, just caught up in the bottoms of consolidations, mid-trend at the tops of trends and the bottom of trends. They're very common candle, and they essentially just show a breather in the market. So go and identify them. See if you can find some examples like the ones I've showed where they indicate trend reversal, or where they pause mid-trend like this one, and see how they actually reacted. Scale in and see, right, how could I have actually found this as a selling opportunity? Or how could I have found, for example, this one down here as a buying opportunity when we saw the market actually flipping? So in the next video, we are going to talk about pin bars, which also are quite an important candle and are very, very wick heavy and very wick focused, looking at rejected prices and how we can actually use those rejected prices to find profitable opportunities. Pin bars are a bit more of an entry signal than the dojis and spinning tops are. However, they do require additionals as well. So we'll talk about those in a minute. They're a very, very interesting candle when you understand how to use them correctly. So thanks for watching, and I'll see you in the next video.